Hello and welcome to Portfolio Matters. In today's share talk, we will be talking about the troubled UK listed oil services company Petrofac, as suggested by our viewer Luke. But before we do that, Richard will read the disclaimer.
Thanks, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. So tell us what you found out about Petrofac, Keith.
Okay, Petrofac is a UK listed oil services company whose share price has frankly been a total disaster on the basis that it's currently being investigated by the SFO as part of the Uni Oil Investigation. So the company was established in 1981, listed in London in 2005, and it used to have quite a lot of oil producing assets, some of which it demerged to form Enquest in 2010. Now, share price is currently about £1.22, market cap of 420 million. They've cut the dividend, PE ratio, forecast PE ratio of 8.7 according to Stockopedia. Big revenues, multi-billion-dollar revenues. And this is a low margin business. So this is a company which has a troubled history. It does these big engineering projects which are low margin and which are turnkey fixed costs. And if it miscalculates its bids, it is on the hook for all the cost overruns. And as we'll see, this has caused big problems in the past. Also, the accounts are rather opaque. It's subject to this Uni Oil SFO investigation. It's banned from bidding for new business in Iraq and Saudi Arabia until the SFO investigation is over. There is a lot to dislike about this company, frankly. And also, it's got a very high cash balance, which is offset by debt. I mean, why? We have seen previously that companies with very high levels of cash offset by debt, that can be a huge red flag. For example, NMC Health, which collapsed in spectacular fashion last year when the cash was revealed not to be there. Lots to hate, but the share price is bombed out and it's the start of a new oil cycle. The oil price is rising. The share price of Petrofac has not risen. Therefore, actually, this might be a good speculation as opposed to a good investment, because not a little piece of good news could send the share price flying. Okay, so this is the sorry tale of the Petrofac share price. Peaked, what, £17.50 back in 2012. You can now have the shares at a discount of over 90%, £1.20. The SFO investigation in 2017 absolutely killed the shares. They've never got close to recovery. And there was another leg down in 2020 when the former SFO pleaded guilty to yet more bribery offences. So what does it do? Well, it's a full service oil service company, and it does design, build and construction, support, maintenance and training. But 80% of revenues are from engineering and construction, which is frankly quite a low margin business. The remainder is mainly the engineering services, and that's even lower margin in 2019, margins of 3.6%. And there are great dangers in these lump sum turnkey projects where they're fixed price And if Petrofac have got their bidding wrong, they are on the hook for any cost overruns. So this is the Lagan Tomor project, which was an albatross around Petrofac's neck for years. This dates back to 2015, 2016. And this is the Sullom Voe facility built by Petrofac in the Shetlands. So the project was to build a 125-kilometre pipeline from 2 gas condensate fields in the North Sea to a new terminal at Sullom Voe in the Shetland Islands. And the original contract was with Total for 800 million, but almost immediately the contract ran into problems. There was problems with bad weather in the Shetland Islands. Who would have thunk it? And industrial action. The unions blaming Petrofac for poor planning and mismanagement, and fundamentally for not hiring enough people. With the result, there was strike action, and the bottom line is, on an £800 million fixed price contract, Petrofac managed to lose $430 million. So 300 million quid. So they were way off. And it then said it would no longer undertake construction of large lump sum projects within the UK. But I notice it has been doing smaller lump sum projects in the UK with offshore wind farms. So that's one risk. But the big problem with Petrofac currently is the Uni Oil investigation in which it is involved. Now, the Uni Oil investigation is ongoing and relates to Uni Oil, which was a Monaco-based intermediary. And the allegations are that various international companies employed Uni Oil on their behalf to facilitate contracts in the Middle East and elsewhere, and then Uni Oil achieved this by bribing the relevant officials. And this all blew up in 2016, so 5 years ago, but the investigations are still very much ongoing. So it was a big scandal in 2016 if you want to go on the internet and look it up. Monaco authorities raided their offices at the request of the SFO in 2016. And the SFO then got full funding from the UK government to investigate Uni Oil. The Uni Oil country manager, Lindsay Mitchell, admitted to bribing Libyan officials in 2016, and they've got various recordings of him. In 2017, Rolls-Royce settled with the Department of Justice for 170 million. And in 2019, former Uni Oil CEO and COO pleaded guilty to bribery charges in the US. Now, how does this relate to Petrofac? Well, in May 2017, the SFO announced that it was investigating Petrofac. And in 2019, their former head of global sales, David Lufkin, pleaded guilty to 11 counts of bribery relating to corrupt offers to influence the awarding of contracts to Petrofac worth 730 million in Iraq and 3.5 billion in Saudi Arabia. And these are the details. Essentially, you note that these charges relate to 2012 to 2015. So, hopefully the company has changed its behavior, but it is still subject to these SFO charges for these historic offenses. And it's ongoing. In 2021, 14th of January, David Lufkin pleaded guilty to a further 3 bribery charges, relating to contracts in the UAE this time, in which 30 million was paid to agents to secure contracts worth 3.3 billion. And this is the press release from the SFO, and Petrofac is saying these are all historic offences. So charges relate to 3 contracts in the UAE in 2013, 2014. So, 7 or 8 years ago. And you'll notice also that these new charges all relate to David Lufkin, who had previously pleaded guilty to 11 earlier offences, and he has left the company, and perhaps that's the end of it. The other potentially good news for Petrofac is that earlier this year, the SFO lost this court case that limited its ability to acquire information from offences that weren't committed in the UK. Now, as all these offences weren't committed in the UK, that may well affect the ability of the SFO to pursue these cases. And that potentially is good news for Petrofac. And also, they only ever seem to have charged David Lufkin. We don't know what further traction the SFO are getting, but as long as this investigation is outstanding, it will affect Petrofac's business. So moving on to the accounts. You'll see this is H1 2020, not great. Revenue declining, earnings declining, net profit was tiny, margin of 1%, cut the dividend. And frankly, results presentation is just opaque. So if you look at engineering and construction, which as we have seen is 80% of business, you'll see when they this chart here, which shows the change in the net margin, project mix. This was decline in the net margin was mainly due to the Jazan commercial settlement. Nowhere does it tell you what the Jazan commercial settlement was. Now, Jazan is one of the contracts on which David Lufkin has been charged with bribery. So presumably there was some sort of settlement relating to the bribery charges, but we don't know what it is. In addition, these engineering construction subsidiary or section does these lump sum contracts, and there was a lot of COVID disruption. So presumably any increase in the timescale and the costs falls to Petrofac. So its costs will have gone up with negative impact on profitability. Now, the engineering and production services sector, which is about 18% of revenue. And again, you're just not terribly profitable, frankly. And when you look at the change in net margin, I mean, this is just not terribly informative. It doesn't mean anything. What's a change in the contract mix? Unless you explain that, what does it mean? It's a very opaque and difficult to understand accounts, frankly. This is on the 2019 report, and if you read this, solid execution delivering our project portfolio. The profit margin was 6.2%. They're happy with that, and they're doing these lump sum fixed price contracts and a single overrun. If you've got only 6.2% margin, you only need one overrun on one contract to wipe out your profit. So there are loads of red flags with this business, frankly. Margins, look at this, margins steadily declining, basically. Integrated energy services, which basically is an oil producer, loses money, they're now selling off. Obviously been hit by the fall in the oil price, but the good news is they're getting out of it. But they have done some restructuring. So they've cut salaries, cut the headcount. They claim to have retained capacity. But, they're saying that they will have cut costs by 370 million odd, which can only be good news. Now, I found this absolutely extraordinary. The orange is how long it takes them to get paid. 196 days, 2/3 of a year. And in turn, it takes them almost as long to pay their suppliers. Extraordinary. And this is the order intake. I mean, they're still getting, these are big contracts. Order intake of $1 billion, some of which is, they're moving into the offshore wind sector. So despite the Uni Oil investigation, as you will see, they are still winning contracts around the world. Now, this is the geography of their bidding pipeline. And what you'll notice is there's no Saudi and no Iraq. Although, they still are getting contracts in the UAE or bidding for them in the UAE, despite David Lufkin having pleaded guilty to bribery charges relating to the UAE. And also, the accounts of this company, they're both opaque and full of spin. So, it would like to say it's exposed to the energy transition, and it's moving away from oil into offshore wind, transition energies and new energies. But actually what that means is they've rebranded natural gas as a transition fuel. It's not, it's natural gas. So, you can look at this two ways. You can say, well, traditional as oil. You can say, well, now we are 58% in transition energies. Or you could say, actually, in 93% in oil and gas. Anyway, so they seem to be doing all right. They're still winning 26% of bids. They can't bid in Iraq or Saudi, but the sectors contracts they're bidding on, they're winning a decent chunk of them. And they claim to be repositioning for the energy transition. So, sea green wind energy contract. But if you look into it, this is a tiny part of the overall offshore wind farm they're doing. What they're doing is they're supplying the transformers. Onshore and offshore substations is not a big part of the business, and these are not big contracts. And now if we look at the cash flow, 2020, not great, cash outflow, couple of dividend. And if you look at the earnings, you'll see they claim to have been profitable before exceptionals, but this is a company with a lot of recurring exceptional items. And this is nasty, and I don't like this. So net debt, huge cash balance, offset by big loans. Why? Why would you have loads of cash on the balance sheet and loads of debt? If any of the viewers have a good explanation for this, please let us know. But to me, I want to make sure that cash is actually there. Other companies which have had this sort of situation in the annual report, it has often turned out all the cash isn't there. And this is a company with a lot of contracts in the Middle East and headquarters in Abu Dhabi or Dubai, I think. NMC Health, worrying. So they claim to be well positioned for recovery. Strategy delivering in unprecedented market conditions. They've restructured, retain a strong balance sheet. I dispute that. The balance sheet doesn't seem very strong to me. Strong bidding pipeline, although the bidding pipeline is much smaller than it was. And obviously they can't bid in Iraq and Saudi. Right, but they've been winning contracts, This is an Australian contract with PTT Exploration and Production on this lump sum turnkey project in Oman. Let's hope they've got the bid right. Contract with INEOS. This front end engineering and development contract for the Arrowsmith hydrogen project in Australia. That absolutely is new, clean, green energy. And if you look at the accounts, they have got big revenues. If they can earn a half decent margin on these revenues, it could transform this business. And they've restructured, cut costs. They've got new management. Perhaps this is a turnaround play. Okay, so the positives. Well, the old CEO who has overseen the disaster that is the Petrofac's listed life, he has resigned in favour of new management. New management is from Shell. The Investor Chronicle claims it is uninvestable and rates it to sell. That's always a positive sign. Is now selling its oil assets and returning to a capital-light business. It's restructured. Bottom line is the oil price is rising. All the oil service companies have cut capacity. So rising demand, reduced capacity, does that mean rising margins? If that's the case, then that's great for Petrofac. And you might hope that this company is stumbling towards competence with the change in management and restructuring. Negatives, and there are loads. So, low margin, exposed to these lump sum turnkey projects where, just big risks. It's got subject to an SFO investigation. The order backlog is falling, so, it's got less and less the future projects to start working its way through. ADNOC, the Abu Dhabi National Oil Company, cancelled its project with Petrofac in April 2020, which had been worth 1.5 billion. ADNOC claimed it was due to falling oil prices, but I noticed that ADNOC are now putting the contract out to retender, as opposed to giving it back to Petrofac now that oil prices have risen. So you wonder what's going on there. Energy services sector division is a disaster, but they're selling it off. Small but growing exposure to offshore wind, as we have discussed. The accounts are just opaque and full of spin, difficult to understand. But then, the share price is really depressed and it has not benefited from the rise in the oil price. So is all the bad news in the price? I mean, any good news could send this share price soaring. If they settle with the SFO, share price goes, leaps. So, in summary, this company, frankly, is a bit of a disaster, but the share price is very depressed and the oil price is rising. The oil price, a rising tide lifts all boats, and it could well be that Petrofac is turning round. And I think this might be a speculation as opposed to an investment. But as always, and in this case in particular, do your own research.
Well, thank you very much for that, Keith. That's so interesting as ever. My concern, I guess, with it is that, as you say, the margins are low. If they try and increase their margins, does it make them uncompetitive? And if they can't increase their margins, then the share price is justifiably low.
Yes.
And I guess that investing in them at the moment is a bit of a punt on whether they can or not increase their margins. But as yet, there's no evidence either way.
Yeah.
Well, there's evidence that they have low margins. There's no evidence as yet that they can increase it. Would you agree?
I think that's true, Richard. But, at the same time, you would hope that the rising oil price means that there's increased demand for exploration and development, and all these oil services companies have cut capacity, and hopefully that means there's a lot of bidding for limited oil service capacity and margins should rise.
I was going to say, if there's a prosecution pending, and we don't know if there's a prosecution pending or not, there's an investigation, then as long as presumably until the investigation either draws a blank or a potential prosecution is completed, that's another big question mark hanging over the company.
Absolutely. Absolutely. And the thing you notice is that the share price is going absolutely nowhere.
Yeah.
So oil price is rising, Petrofac shares going nowhere. So the thing is, it needs a catalyst, and the catalyst could be just good results, or it could be an end of the SFO investigation. And if all that is satisfactorily resolved, then the share price could fly. Now, frankly, I like a punt. And the shares are bombed out, so I bought a bit of this.
Yeah.
But, this is super high risk.
Well, I'm going to add it to my watch list, Keith, and I shall monitor it carefully.
Yeah. Well, I don't think we have covered a company with as many red flags, frankly.
No. Good. Well, thank you very much indeed.
Okay. I hope you all enjoyed that. Please, can you press like and subscribe to our channel? And if you have any ideas, please, on why they've got so much cash, please share them with us. But in the meantime, it is goodbye from Richard Wheater.
And goodbye from Keith Jordan.
Goodbye.
Bye. Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.